Welcome to the Allan Small Financial Show. As always, I want to thank all of you for taking the time out of your busy day to spend it with us. Investors continue to be concerned. I would say is probably the best word. They look out and they see what's happening in the US, what's happening here in our country in terms of our economy, the US economy, tariffs, trade negotiations, interest rates, inflation. There's a lot on investors' plates right now. And today we have, I think, a fantastic show. Who better than David Patterson, Ontario's representative in Washington, D.C., to shed some light on what's going on between Canada and the U.S. with respect to trade talks. David was kind enough to give us some time this past week and talk to us about what's going on behind the scenes. We haven't really heard a lot of information lately between Canada and the U.S. Conversations are ongoing, happening on a regular basis, and we got to talk to David and get his perspective on what he thinks or how things are transpiring. So, a fantastic guest. We're going to have the interview with David shortly, but let's put up what else we're going to talk about on our show this afternoon. And there you have it. Ontario in Washington, D.C., David Patterson in Washington, D.C., an interview. And he's our representative in Washington, Ontario's representative in Washington. So he references Premier Ford quite a bit in some of the comments the Premier has made. After our interview, we're going to speak about some of the main headlines that have caught our attention this past week. First one, Trump versus Apple and the EU. For those that are keeping track, President Donald Trump has said that he wants Apple to bring back the production of iPhones to the United States. And Apple has basically said they're going to move that production from China to India. The president has recently said that's not good enough and is threatening a 25% tariffs on Apple iPhones. We'll speak about that. And at the same time, almost right at the same time, almost the same day during the last week, I think it was Friday, I believe, last week, we heard that the president wasn't happy with respect to what's going on between negotiations between the U.S. and the EU. So he has now threatened to put a tariff on EU goods coming to the United States of 50%. Originally, he said he would put that on as of June 1st, and now he's kind of taken a step back and said that if negotiations don't happen and if things don't go well, he will put those tariffs on come July 9th. We'll get into that as well. Top three things to consider over the next 5 to 10 business days. I think that is quite important. Obviously, a very popular segment of our show that a lot of people like to view and see. These are most important things that I think investors should focus on. Economic jitters in the US and Canada. We are definitely hearing about a lot of jitters. A lot of people talking about Canada already being in a recession. Is the US falling into a recession? We'll touch on that. Companies increasingly disclosing tariff impacts. What is happening at companies? What are they saying? Are they going to have to raise prices? Some companies like Amazon would love to be able to stipulate, well, the price is going up because of tariffs, but this is the base price, and then the tariff that goes on top of that to give you the current price. I know the president wasn't too happy when Amazon said they were thinking of doing that. And Amazon has since stopped going forward with that. But we're going to hear some of the comments from some of the major companies, especially in the US, on how they're dealing with the tariff impacts. Quick hits, 3 ideas that you've probably seen in the news recently. I will comment on all 3. And last but definitely not least, as always, your questions. I will attempt to answer as many questions as I can. Depending on how long the show goes, we hopefully will touch on 1 or 2 questions. So without further ado, let's move on with the fantastic interview that I've had in the last week with David Patterson in Washington, D.C. I'd like to welcome David Patterson, Ontario's representative in Washington, D.C. David was appointed to the Ontario position in November 2023 and brings 30 years of business experience, serving as chair of the board of directors of the Canadian Chamber of Commerce, as well as 4 other boards. Previously, he was the lead for corporate and environmental relations for GM Canada. He also served as senior vice president Government Relations and Public Policy at BlackBerry, formerly Research in Motion. And before that was SVP, Senior Vice President, Public Affairs at Manulife Financial. Want to welcome to the show, David. Thank you for being with us.
Thanks, Alan.
It's excellent to have an expert in the field of, I guess, someone who's on the ground, I guess, with regards to tariffs on the ground there in Washington, talking to Washington on a regular basis. I think before we came on air, you mentioned that you've been knee deep in all this stuff for the last year, and I guess definitely not for the faint of heart. This, I'm sure, there's been a lot of roller coaster rides, but I thought we would start with just a simple question. Where do things stand right now with regards to the tariffs that the U.S. has placed on Canada? We hear a lot of discussions between the U.S., recently the U.K., U.S., China, U.S., and other countries. We haven't heard much with respect to U.S. Canada discussions. We know that there have been, well, at least I found out recently that there were some tariffs removed by Canada on some goods coming from the US, kind of under the radar. No one really made any big announcement on that. But where do things stand right now between Canada and the US?
Well, I think the simple answer is we're still in the midst of a hurricane, and it's a global hurricane now. But your question is a good one because the disruptive storm of Trump tariff palooza here is really something that we, of course, got hit with first in both Mexico and Canada, and back at the very beginning of February. And so we've been in the storm longer than others, but we've been engaged longer as well, which is also important. Of course, in the midst of that, we also went through a couple of elections. We went through a change of prime minister, and so it's been an interesting sort of evolution from my role in Ontario. We probably became most directly engaged with the Trump administration on March 13th. And that came shortly following some of the provincial actions that were done in response to the application of what they call IEEPA tariffs, or fentanyl and border tariffs. You may recall that Premier Ford took a number of actions, including putting a surcharge on electricity. And that certainly was one thing that got the attention of the president and Secretary Lutnick. They exchanged olive branches, and we met with Secretary Lutnick, and we indeed brought our federal colleagues with us because they were in the midst of a lot of those changes I mentioned. And so I've really been working directly with the Commerce Secretary's chief of staff and with the chief of staff to the USTR since that time. And I'd say that together with not just our really excellent federal colleagues, we have really great experts here in Washington, and with Dominic LeBlanc, who's consistently been part of all of that, but really importantly with our industry groups here in Washington too. And as you know, I'm a business guy. I was from a variety of our key sectors, and really the influence on change here in Washington, no surprise, is really a lot more effective when you're aligned with American business. And on this, we are, particularly with respect to our auto sector and a number of other areas. And so we were able to make some mitigation, some changes in terms of the initial application of tariffs, and we can talk about those as well. Really, it centered around an idea that came out of the auto sector, which is, if you're operating here within North America, you follow the rules of the USMCA, and it's really difficult. It's challenging to do that. So why would we penalize others when we're doing all this hard work, less than you're penalizing us? And so we were able to see some mitigation on the fentanyl tariffs so that people that, pardon me, that were compliant with the USMCA and their businesses could continue to have duty-free trade. That was really important, I think, in terms of keeping things moving. And in the auto sector, really with the lead of the OEMs here in in Washington, we were also able to see that the application of the what they call Section 232 tariffs on automotive were applied in a different way to automotive trade within North America, so that the tariffs were 25%, but only applied on non-U.S. content in our vehicles. And coming from the auto sector, I can tell you the vehicles we make in Canada have about half US content. So it's sort of like half the tariff. And so these were things that we were able to achieve. An important one we really worked hard on here was to make sure that our auto parts continued to travel across the border duty free. And so working with others here, we were able to achieve that. And then we saw change at the federal government and things settled down. And of course, more recently, we saw Mark Carney in the Oval Office, and we were able to start seeing the federal government grab the baton more. And they are, even this week, we've had Dominic LeBlanc here in Washington, continuing those discussions to try and make more progress. So progress, yes, in the eye of a storm, but still we face tariffs on aluminum and steel of 25%. That's unacceptable when you have a trade agreement that should have that being duty-free trade. We face the threat of additional tariffs on copper, on lumber, on pharmaceuticals, on semiconductors. And so what I think is the every time we can sort of move forward and get some relative competitive advantage in terms of working with the United States, we still have to keep in mind that that we have massive uncertainty in the market. People are not making investments in big projects because they need certainty to be able to make multi-year investments. And so there's a lot more work to be done. Yes, Canada retaliated, and we did that in different ways. There was a degree of retaliation right from the get-go on fentanyl tariffs, and then there was a retaliation on automotive tariffs. It gets complicated quickly because then the federal government can use remissions to give some of that tariff money back to the auto sector under certain conditions. So it is a moving picture, but there is still an awful lot of work to be done. And I think, yes, there was a little bit of late media coverage of some of the removal of some of the countermeasures, but they're still very strongly in place. There's, tens of billions of dollars of countermeasures that are still in place. And I'll add in as well something that really has never happened before in a lot of these trade situations is that the provinces who are not directly responsible for trade, that's a federal responsibility, have stepped up in the meantime while we went through this period of change, and led by Premier Ford, who leads the Council of Federation. But we also have in the provinces taken various actions as well. And we're very highly supported by Canadians who are buying Canadian and making shifts in that regard. So there are a number of countermeasures still in place, both at the provincial level. One comes to mind, not having the LCBO stock at shelves with wine from California, for example. And there's other actions as well that are there. So lots more work to do. Really encouraged to see Dominic here this week. I think we really get along well with the province and him. We think Prime Minister Carney is doing all the right things, and so we need to keep pushing forward because there's some real additional threats, even some this week that have emerged as well.
Right. And I guess when these tariffs were first announced, I know Premier Ford, you mentioned Premier Ford. I know he was talking to a lot of, friends, allies in the United States, politicians, different governors, senators from different states, as obviously Canada is the number one trading partner for many states, Ontario, number one trading partner for many states as well. And you really saw a large pushback from some of these governors in Kentucky, for example, when, like you said, the alcohol coming up, we were no longer selling U.S. alcohol. That pushback, is it still there, or have these politicians said, okay, well, we came out strong against what was going on, and now we just got to learn to live with these tariffs? Are we still seeing the pushback from individual states that obviously have Ontario or Canada as number one trading partner?
Well, I would say President Trump is very much in charge and running the show and rushing to get his new trade regime in place. And I think he needs to do that before the midterms, where there's some question as to whether they will still control the Congress. And there is an awful lot of pushback on the president within the United States as people start to either deal with uncertainty for investment or deal with increased costs, because of course the thing that people sometimes struggle to understand about tariffs is they actually penalize yourself. You put a tariff on, and your own companies are going to have to pay a higher cost to import things. And so we're starting to see some of that take place. I've met with, I don't know, over 100 Republicans in the last year in Congress and certainly members of the administration. In Congress, I have not had a bad meeting with a Republican. In private, as the premier says, they love Canada. They have important trade between their states with Canada, and they would love to get back to normalized trade with Canada. But they will give Trump all the time that he needs to execute his program. And as we just saw, for example, with another big change, which is the tax bill that's going through Congress yesterday, when the president shows up in Congress and says enough is enough, get it done, it does tend to get done here. So, but even today we have some of our great positive allies in Canada visiting to say that it's important that we work together. And so people that I've had the pleasure to get to know, like Amy Klobuchar from Minnesota, or Senator Kramer from North Dakota. He is the chair, for example, of the Armed Services Committee, and a very important leader in Congress for the Republicans. He talks regularly with President Trump. He's become a great ally of Premier Ford. They talk all the time. And he very much is also a co-chair of a alliance of pro-Canadian members of Congress. And so it's encouraging to see them there. It was encouraging to see what was sometimes called the Kane Mutiny in Congress, where Senator Kane also took some steps to sort of complain from a legislative point of view about Canada's mistreatment on this. And so we have great allies. And I think when you're going through anything, whether it's in business or something like this, you need to keep your head down and keep pushing, and make sure you keep all of your allies close and informed. The role of Congress is yet to play out, but it could be very important in trade. I mean, Congress is responsible for trade. It delegates authority to the president in the US system, and they can also haul it back. So, for instance, some of the legislative authority that the president has used for our border tariffs, the IEPA legislation, is something that can be hauled back and reviewed by Congress. And so they do have a role. They have not pushed back very hard on the president, in my view. And frankly, a lot of US businesses have been timid as well because they're concerned about getting on the wrong side of the president. So that's a little bit of the reality that is here. But given all that, I wouldn't trade places with any other country on earth in terms of our ability to have a relative competitive advantage when we come through this. And I think that's really what's most important at the end.
Right. And your answer to my previous question, it kind of leads me to the next question, in that obviously, everything sort of changed about maybe a month ago when the president said that he's willing to negotiate with respect to reciprocal tariffs. I think initially he said tariffs were not a negotiating tactic, and they were going to stay. And then obviously he then said, well, if you make me a good deal, then maybe we'll change it. So I guess my first question is, do you think that was a turning point in the trade war? And number two, or my second part to the question is, the president always talks about having all the cards. I know when Zelensky was in the Oval Office, he told him, "You don't have the cards. With us, you have the cards." The president says, we don't need to make a trade deal. we're just going to do it because it's the right thing to do. My question, or the second part of my question is, do you think the president has all the cards? Because, we're starting to see, as you've mentioned, pushback. We're seeing the bond market react negatively, the stock market react negatively. We're seeing the risk of emptier or empty shelves come the back to school season, the holiday season. We're seeing pushback from Japan, EU, and other places around the world. So do you think the president holds all the cards, or is he bluffing? Is he a great poker player?
And the question is, what kind of cards are they? Are they playing cards or tarot cards? I'm not sure. But what he has done is, some people would call leveraged negotiating, others would call a shakedown. And so he has created a circumstance by putting tariffs in place so that he can then negotiate with different countries and ask for things in return. And they're not always trade requests that they come for. He may be interested in people's military spending. He may be interested in addressing legislative things that have been problems along the way. And so there isn't a lot of kind of particular rhyme or reason other than the patented Trump approach of the art of the deal, which is to negotiate from a position of dominance. And he has something that is very important, which is the US market. It's the richest and most valuable market in the world, and everybody wants it. And if you really try to listen hard and look for a string of rationality in what he's doing, or why some people would be supportive in the United States of the things that he's doing, is that the way that trade has progressed since 1945 now does have a situation where in trade in particularly manufactured goods, countries outside of North America have been able to get entry into that market for a very low cost of, somewhere, depends on the product, but take an automobile, for instance. People can produce an automobile with their own parts and labor anywhere in the world. And many of these countries are getting them into the United States for paying a 2% tariff. Where those that are producing inside North America have all kinds of hoops to get through in terms of content rules and USA compliance. And so what he's saying is, take the auto tariffs, is that I'm going to put them up to 25% for everyone else. And he put that on us as well. So we then mitigated and sort of reduced that by half. That gives us an advantage within North America. So what I'm saying is that if we look at this as a zero-sum game, where some people say it's almost a nostalgic, after 3 months, view that we've got to get back to the world the way it was, I'm not sure we ever will. I think it's very likely, and Democrats would tell you the same, that even after the Trump administration, whoever wins, we're likely to still see a base tariff for entry into the United States as a way to both encourage investment in the United States, but also to sort of level the playing field in terms of access into the United States, which is easy for others. And many of those countries, like Japan, like South Korea, even the EU, and we saw, as we talked about, some actions against the EU even this morning. They don't allow goods from the United States into those markets through a whole variety of different barriers, non-tariff barriers and other things as well. So there is a serious trade change. It's a global change that's taking place. But because of the USMCA and because of our integrated market, our deep supply chains, as the premier likes to say, you can't unscramble the eggs here of the integrated supply chain. So let's just make a bigger omelet, and so let's work together on those things. But you're right. Within the United States, the disruption of all this change is starting to bite, and the biggest concern is uncertainty for business. And that translates into uncertainty in markets, in bond markets, responding to these types of things. That transcends into pressure in Congress. So there is mounting pressure to get this stabilized. And I think my theory is that the first place it's likely to stabilize, other than one agreement that we've seen from the UK, should be with Canada. And I would think there is good opportunity for us to make significant more progress, even in the next couple of weeks here, if we continue to interface with the Trump administration and make a case that it is good to settle things down in their self interest. He will never do anything in our self interest, but he will if we can show it's in his self interest. And because of markets, as you say, because of integrated supply chains, because in truth, we have what he needs to run his economy. So, Allan, let's just do a quick border walk. He says, I don't need your goods. But if we start in British Columbia, he does need our labor to build homes. He does need our oil and gas. He needs our uranium out of the West. He needs our potash to grow his crops. He needs our nickel to run his military out of Ontario and Manitoba and Quebec. He needs our electricity. And boy, when things don't get delivered on time, he gets really nervous. So we should be in a very confident type of discussion with him. And last, as we've been hearing lately too, and this is why it's really encouraging to see the approach that Mark Carney is taking, is that they need us as a defense partner. And that trumps everything, pardon the pun, but it really does here. Every conversation in Washington begins and ends with national security. So for all those reasons, it is in his self-interest to settle down the market in North America with a deal with Canada, or perhaps with Canada and Mexico, and start getting people investing again, because his own uncertainty will prevent what he's actually trying to achieve.
Absolutely, absolutely. David Patterson, Ontario representative in Washington, thank you so much for coming on our show and shedding some light as to on what is going on behind the scenes and giving us your perspective on tariffs, the trade war, and everything else. Good luck with everything in the negotiations. Good luck in the coming weeks and months, and hopefully the storm clouds can part a little bit, and we can see some blue sky or brighter days ahead. So thank you very much.
Thanks, Alan. There's some light coming through already.
Excellent. Have a great day, and hopefully we'll talk soon. Take care.
All the best. Thank you.
A great interview with David Patterson. It was a long interview. I know David gave us some really great answers, precise answers, giving his thoughts on, as I say, who has the cards? Is it the president of the United States, or is the president finally realizing that the United States can't do it on their own? And maybe some the scare of empty shelves or partially empty shelves over the next 6 months, the holiday season, the back to school season. Maybe that is a fear enough to get the president to hopefully come to an agreement on some of these trade deals with other major countries around the world. So fascinating interview. I hope all of you enjoyed it. Now I wanted to talk, or I guess turn the page a little bit, slightly different, but I wanted to talk about the tariffs that President Trump has said that he would put on Apple, because he was not happy that Apple has moved production from China to India with respect to the iPhone. And also want to talk a bit about his threat to put 50% tariffs on the EU. Now, it's quite interesting because since he's mentioned the 50% tariffs on the EU, he hasn't scaled back to 50%, but talks have happened since then. We know that the Trump administration has had talks with the European Union. And because the talks have, I guess, gotten a little bit further ahead and they've actually happened, so the president has agreed to push back those tariffs to July 9th, hoping that a deal will happen before that deadline. So quite interesting as to what's happening. Obviously, the effect on the markets when that was announced last Friday, very negative, very negative. The market sold off on the fact that tech sold off on the basis of the Apple tariff announcement, and the rest of the market sold off pretty much based on the announcement of an EU tariff. So it's it is becoming, in my opinion, increasingly evident that the president wants to get trade deals done. I think that something can happen. I think the EU can hopefully come to some sort of framework with the president. Hopefully, they can come to some sort of an agreement. And as I say all the time, I know that the United States, most powerful country in the world, largest economy in the world, but they do a lot of business, obviously, with many other countries. And with respect to the European Union, they do a lot of business with the European Union because we're talking 27 countries in the Union. The European Union as a whole is practically as big as the United States in terms of economies, or I guess that region is equal to the United States alone. That goes to show you how big the United States is, but a very important region for the US in terms of trade, imports, and exports. So it is definitely in the president's best interest to make a deal, to get a deal done, one that is obviously fair, as he will say, and good for the United States to improve trade. First chart here that we have talks about trade with the European Union and the US. There we go. Bit difficult to see the numbers at the top, but what's most important is the blue and gray lines. So what the gray line represents are imports. Imports to the US from the European Union. And you can see you're talking over $600 billion of imports to the US. It is the highest today, well, in 2024. Obviously, we don't have 2025 numbers as yet, but it is the highest in 2024 that it has ever been, which is a pretty big number. Then you look at exports, from the European Union, or exports to the European Union. You're looking at, which is the blue line, almost 400 billion. So let's say roughly $370 billion in exports to the European Union. So to me, this is a very important region for the US, to say the least. You couple them with Canada, with Mexico, and China. You're talking the four, in my opinion, four largest regions, largest countries, trading partners, let's call them, to the United States in the world today. And all four right now, I would imagine, are knee deep in conversations and negotiations with the United States. Go to our next chart here. You can see who out of the European Union is the largest trading, I guess, partner, or who trades most. And it is Germany, the largest economy, obviously, in that region in Europe. $161.2 billion of goods to the United States were made by Germany. Now, I would imagine a lot of that are automobiles, as I'm sure they are. And we know that there are a lot of, or there are tariffs in the auto sector as well, parts and cars that are made outside the United States. So I think a lot of these numbers are going to change in the not so distant future if we do not see tariffs being eliminated, or at least brought down to the 10% line that I think the U.S. is comfortable holding on all countries. So that's kind of it's going to be a baseline 10% tariff. Thought we would switch now to the other top headline. So European Union, United States in negotiations. Tariffs are on hold until July 9th. But then we have the tariff situation with Apple. And as I said earlier, Apple tariffs brought down the tech industry quite a bit on Friday when they were announced. And what you ended up seeing was a market reeling from that announcement. And I don't think anybody expected president to issue tariffs. We know that the CEO of Apple has been in conversation, actually visited the White House recently. And I was hoping to hear some sort of middle ground met, or a deal reached. We know Apple has promised to invest up to $500 billion in the United States, but I guess that's just not enough for the president. He wants to see the manufacturing of iPhones, and we all know that that would be a very difficult thing to do just based on labor alone. Labor costs alone, minimum wage in the United States is much higher than many places around the world, such as India, such as China, of course, that Apple is now manufacturing phones. So to bring back that manufacturing to the United States would be very difficult and very costly. Perhaps the average iPhone would go up by maybe as much as $200-300 if they were to manufacture in the United States. Here we have a chart, how Apple shares have reacted to U.S. tariff news. And I guess the big downturn that you see there, Trump imposes 10% tariff on all imports with higher tariffs on 57 countries. So that's when they put on the reciprocal tariffs at the beginning of April. Then you saw the market and Apple deteriorate significantly. The pause in reciprocal tariffs is when you saw a bounce back in Apple shares. Certain electronics excluded from reciprocal tariffs. That was another jump off point for Apple stock. Continue to move higher all the way until I would say almost the end of May. And then we've seen a topsy-turvy market in May, and the most recent downturn led by the announcement of 25% tariffs on iPhones. And interesting, I know that iPhone or Apple, I should say, has complained. I know that I'm sure many in the industry are saying, well, if you put a tariff on iPhones, who are the winners here? And that would be the other phone makers like Chinese phone makers or even a Samsung. So now there's talk that perhaps if with the 25% tariffs on iPhones, perhaps we may see 25% tariffs on other phones as well coming into the US. So two big headlines that came out within the last, let's call it week or so, more towards the end of last week, and two major headlines that caused the markets to pull back. Since then, we had a holiday in the US on the Monday, so markets were closed. Canadian markets were up quite a bit on the announcement that they're pushing back this tariff on the EU to July 9th. On Tuesday, that's what drove the market significantly higher during the course of the trading day. And obviously, here we are on Wednesday. So, two announcements that I think are extremely important to the markets, and two announcements that I think individual investors got to continue to be mindful of and watch as we move forward. Now, the part of the show where we talk about three things that I believe individual investors need to be focused on, keep one eye on at least, or maybe both eyes on, both ears on, before you make your investment decisions. And here they are right in front of you, as always. First one, Trump tax bill. We know the tax bill that Republicans and the president are trying to get pushed through Congress. These are to extend the Trump tax cuts from the first term, plus few more tax cuts, like no tax on tips, for example, that the president campaigned on when he was running for or campaigning for his presidency. Also, trade negotiations. Trade negotiations, something that's going to be front and center probably for weeks to come. And anytime we hear about a deal being announced, or at least the workings of a deal, or maybe the framework of a deal, I think that is something individual investors need to focus on. Inflation and GDP updates. We're going to get GDP, the latest GDP update out of the US on Friday. PCE, personal consumption and expenditures, will be announced on Friday. So that is important. Everybody's waiting to see when the higher prices will start to bite. Canadian big bank and NVIDIA earnings. And perhaps we should start with NVIDIA earnings because NVIDIA is going to report later today after 4 o'clock. Obviously a big report, one of the largest companies in the world. I think they're second largest now to Microsoft, largest chip maker, AI. It is extremely important, as goes NVIDIA, probably goes the AI sector of technology, perhaps goes all of technology. And we know that NVIDIA just in general makes up a large component of the S&P 500. Canadian big banks have started to report. We heard from Scotiabank. We've heard from TD Bank as in our examples. And TD Bank, very good results. Scotiabank, not so good, although Scotiabank did increase its dividend. So we're going to talk about some big bank earnings as well. So let's move to the first topic, tax trade bill and trade negotiations. So needless to say, this is extremely important. The president campaigned on lowering taxes and obviously extending his taxes, lowering taxes even further, no tax on tips as an example, and trade negotiations, right? He promised to bring back manufacturing to the United States and allow other countries to open up more so that the United States can benefit from freer trade, let's call it. Maybe not free trade, but perhaps freer trade, or maybe more balanced trade, as the president would say. So those are two big points. And we know all about the trade situation, waiting for really maybe our second trade deal to be announced. Hopefully that'll come soon. And we also know about the tax bill. The tax bill right now is passed one side of Congress now moving towards the Senate, and it's going to be tough to pass the Senate. I'm sure the bill will look slightly different by the time it gets through, but I do believe we're going to see a tax bill, and I do believe the first term Trump tax cuts will be extended. Plus, as I said, a few other tax cuts as well. Our first chart here is an interesting one. It shows who is benefiting or who will benefit from the recent bill. And it's I think it's been called one beautiful bill, right? Or one, I think that's the term for it. Who's going to benefit? I think it's actually big beautiful bill. I think that's what they're calling it. But who's going to benefit from that? And well, this chart tells us who is going to benefit. And you can see here that households earning less than 51,000 would see their income actually drop next year, while the top 0.1% of households get an average boost of about $390,000, according to Penn Warren budget model estimates. So you can see here the average change in income after taxes and certain government benefits in 2026 by income group, 0 to 17,000. You can see here 93,000 to 174,000. The benefit is small, but it is there. Lower than that income, lower income earners, it's less than that. If you look at when you start getting into 388,000 to 988,000, you can see maybe a 17.8 benefit, and then it's not really until that long line at the bottom is really who benefits most, and those are your highest income earners. So anyone making over, in this case, according to this chart, over $4 million. So, you hear all the time, who are these tax cuts and who are they benefiting? Well, this is a chart to show you that, unfortunately, it is the wealthy, the ultra wealthy, that are benefiting most from these tax cuts. And as you move down the income ladder, if you will, you get less and less of a benefit for the lower income individuals. Our next chart here, we can pull that up. And again, this talks about the tariffs, how it's hitting hard. And, we want to get rid of tariffs. We want the trade negotiations to go through positively for the United States and for Canada and for all countries that I guess most countries around the world. That will only benefit not only our economy here in our country, but it'll also benefit, needless to say, the stock market. And I know the United States has said that bringing down the tariffs, perhaps even to 10%, that is a win for everybody. Right now, tariff rates are at the highest, one of the highest levels we've seen and for quite some time. You look back, and this next chart shows it. If you look back during the Depression in the 30s, you're looking at 20% at that level. Right now, after the 90-day reprieve on China tariffs, as you can see on the far right, 22 points in 2 weeks. You can see that obviously coming down by quite a bit. But if the 90-day reprieve does not, succumb to a trade deal, you can see how high the tariffs will be. And tariffs, as the title says, tariffs hit staggering level relative to history. U.S. effective tariff rate in percentage. So there you have 20%, and it could be as much as 25%. Right now you have that reprieve. If in China, for example, if they can get fentanyl under control, perhaps they get rid of that 25% tariff on fentanyl, and they just have the 10% tariff. Again, if they can come to some trade deal or trade negotiation. So as investors, we need to keep an eye not only on the tax bill, if that's going to be passed. If it is, what does that mean? It could mean higher debt, which is not good for the bond market and the bond market, what they're signaling, but it could be a positive maybe for the stock market. So we'll have to see how that goes. And in the meantime, while the tax bill is being negotiated, a big, beautiful bill, as they call it, we're looking at hopefully to hear some announcements on some of those trade negotiations. Our second point from our top 3 things to consider before you make your investment decisions is to keep an eye, obviously, on the inflation, the economic data, inflation data, GDP data. and that is being announced, has already been announced. We're going to get a second reading on US GDP. We're going to get a reading on monthly GDP out of Canada shortly. And these are very important numbers for us to parse through. We get to see, is the country going into a recession? Are things continuing to slow down? And what is inflation? Where does inflation stand? Do we have higher inflation, slower growth? Does that mean a stagflation type of scenario? Or are we seeing growth hanging in there and pricing still not going up as yet? Our first chart here is PCE, personal consumptions and expenditures. We're going to get that number, as I said, at the end of the week. Right now, the core number, excluding food and energy, 2.6%. The headline number down to 2.3%, the lowest we've seen it in quite some time. Keep in mind, the Federal Reserve has a target of 2%. That's where they want to get this down to. Our next chart shows Q1, US Q1 2025 GDP advance estimate, which is 0.3 negative percent. We saw that number come out recently, but you can see in Q4, 2.5%, and Qs, from quarter two and quarter three from last year, over 3% growth in GDP. So we already have our first negative number. If the number stays negative in the US, that will be the first quarter of negative growth. If we see the second quarter showing negative growth, then yes, a recession will, the US will be in a recession. And obviously, depending on how mild or significant the recession is, that will obviously affect the economy, jobs, spending, and you name it. Inflation probably will come down if people aren't spending as much. Next chart here, Canadian GDP. In Canada, this one is a monthly chart. And you can see for the month of March, 0.1%. For the month of February, basically zero. Prior to that, we had a big jump or a bigger jump, 0.4% in January. But you can clearly see how things are slowing down in Canada as well. And, the question becomes, are we in a recession here in Canada? I know talking to some investors recently, they've heard from some individuals that they've seen in the media, BNN or on radio, and they've said they believe Canada is in a recession, and they believe that really for two reasons. One, they're seeing exports really slowing down in Canada. Obviously, exports to the United States is probably the main cause of that. And again, loss of jobs, not growing jobs as much as quickly. And again, you're probably thinking tariffs are probably a main reason for that as well. So tariffs are starting to bite more as we move forward. And if trade deals are not made soon between Canada and the US, a lot of economists think that, yes, our country can move into a recession. So keep an eye on the economic data coming out over the next few days and the coming weeks until our next show. Economic data is extremely important for what the Bank of Canada is going to do, for what the Federal Reserve in the US is going to do. Our third and final point with regards to what individual investors need to focus on before they make their next investment decisions. Bank earnings, Canadian bank earnings, and NVIDIA earnings. Let's start with NVIDIA because one of the largest companies, second largest company in the world today, they report earnings after the bell today. So we're going to get their earnings really soon. We're talking, in the next 4 hours, 3.5 hours. And NVIDIA is so important to the stock market. We have a couple of charts here to show you how dominating NVIDIA has been as a stock as compared to, well, our first chart shows it as compared to other stock. Vistra, as compared to Meta, as compared to Coinbase, etc. There it is. And you can see NVIDIA at the top. It has definitely done the best out of all those stocks. Other tech stocks there, Coinbase, obviously crypto affects it. Vistra is energy, Supermicro computer. Obviously, they're in the AI world as well. Our next chart on NVIDIA, we have another one, and it's titled NVIDIA Runs Away from the Competition. Look how well NVIDIA has done. And this is going back to, going back to 2000, before 2023. So in the last couple of years, look how well and how much it's outperformed its peers. You can see at the bottom there, I don't know if any of you noticed it, AMD and Intel. Those are, I guess, Intel used to be the most dominating chip maker in the world. AMD now is actually surpassed Intel, and now is in second behind a dominating NVIDIA stock, NVIDIA company. Our next chart, another chart on NVIDIA. And if this doesn't show you how well NVIDIA has done versus everybody else in its competition, I don't know what does. And you can see here the data center business. Data center business dominates NVIDIA. Data center business dominates AMD as well. And as you can see here, Alphabet, which does a lot of things, also is in this place, in this space, Google Cloud as an example. But look at how NVIDIA has done. Data center or corresponding business segment revenue quarterly. Look how high NVIDIA has gone based on itself and based on its competitors. It's just an unbelievable run that NVIDIA has had. Pulled back recently based on this DeepSeek. We talked about it on a show a few shows ago. A low cost, DeepSeek doing what AI or NVIDIA chips, high-end NVIDIA chips could do at a lesser cost. And we found out quickly that that's not may not necessarily be the case. The big tech companies continue to spend on AI chips, and NVIDIA is definitely a benefactor for that or of that. We have an NVIDIA chart. This is a year-to-date chart. There it is. You can see that NVIDIA, yes, had been coming down from about, let's say, mid-Feb to, let's say, in and around middle of April, and then really jumped up, came back down, and then really has never looked back. Month of May has been a fantastic month for NVIDIA stock. So something to keep an eye on. Obviously, we're going to hear the results tonight, just after 4 p.m. Let's see what happens. A lot of people thinking that its China business might bring down the numbers a little bit, but perhaps business with the rest of the world will offset the China business that has been lost due to the United States not allowing NVIDIA to sell their chips to China. I also mentioned Canadian bank earnings. We're going to continue to see Canadian bank earnings. Royal Bank, CIBC reporting tomorrow. I think Royal Bank is going to show fantastic numbers just based on what TD Bank has told us in the last, they actually reported earnings last week. I think TD Bank's earnings is a good inside view as to how Royal Bank is doing. TD Bank, really fantastic numbers right across the board, from net interest margin to just growth. Their business in the US getting better. If you recall, they had the issues with money laundering. That is not as much, I shouldn't say not as much of a problem, but they're working on addressing that, and that is going well. Our first chart is one on TD Bank. You can see how well the stock has done for the month of May, and recently has moved higher than $90 a share once again. That is a mark that we have not seen in quite some time. When the issues, money laundering issues came out, TD Bank was trading under $80. So anyone who had the iron stomach to buy shares, they did quite well. Our next chart here, Royal Bank. Again, another stock that has had a great run in the month of May. They're going to report, as I said, tomorrow. And our third bank chart here is Bank of Nova Scotia. And their earnings came out on yesterday. Not as good. The good news about them is that they increased their dividend. So now their dividend is over 6% once again. Increased share buybacks. They're buying back their own stock, which again is good for the stock. And that allowed the stock to move up initially yesterday with the news of their earnings that came out just yesterday. So overall, big banks, decent start to the quarter, decent start to the earnings season. I think, as I said, Royal Bank, CIBC, I'm looking forward to some good things there in tomorrow. And I think overall, investors need to keep an eye on these big bank stocks, because living in Canada, it makes up a very large component of the Toronto Stock Exchange. And if you are a Canadian investor, you probably own a lot of these Canadian banks. So very important to portfolios. NVIDIA, very important to portfolios as well. Those things coupled with obviously announcements out of Washington, the economic data that is coming out in the coming days, all very important for individuals to be focused on before you make your investment decisions. economic jitters. I guess everybody has them right now. We're all nervous that perhaps Canada may already be in a recession, according to some. The U.S. already seeing one negative quarter of GDP. What does that mean? Uh, does that mean that the markets are going to, or potentially going to fall? Are we going to see some job loss? Are businesses going to have more difficulties? We haven't seen it as yet. We haven't seen prices rise as yet. So inflation is still showing under control. Prices seem to be staying put. But of course, we got to eat through all the inventory that was priced at the lower price. And pretty soon, probably, I would imagine by mid-June, end of June, we're probably going to start to see a lot of inventory on the shelves at the higher price points. So that is definitely worrying individuals, and it is making consumer confidence fall. Although we did see consumer confidence rise yesterday a little bit in the United States, overall it is still struggling. Consumers are still struggling with what is going on, and more importantly, what they believe will happen in the coming quarters. Our first chart here is on Canada. Canada expect to see a recession as GDP declines. And it looks like most are Bloomberg in this case, that's the source. They're saying that we could see negative GDP in quarter 2 and quarter 3. The interesting thing about a recession, people ask about it all the time, because it's backward looking, right? 2 negative quarters of GDP back to back. We usually don't get that data for well after the final data, well after the actual quarters have been reported. So most of the time, as I always say, or often say, we find out we're in a recession, or we were in a recession, and by that time, we're probably already out of it. And especially if it's a mild recession. And I think if Canada does or is in a recession, obviously it is quite mild. Our next chart, change in real GDP in the US. There you have it. As I mentioned, already showing a negative 0.3% for this first quarter. We get another negative print in the second quarter, and we could see a negative, or I should say, 2 negative quarters, and therefore a recession. So that is, I believe, at the heart of many of the jitters that individual investors are facing or are fearful of. And keep in mind that even if we are in a recession here in our country, or we go into a recession, that doesn't mean that the market has to go down. That doesn't mean that jobs have to be lost. You could go, or you could have a mild recession, and I can see the stock market actually rising. We've had cases in the past where we saw 2 negative quarters of GDP or growth, and the stock market actually went higher. So for those investors that are nervous about a recession, it just doesn't mean, the R word doesn't mean total chaos and loss of wealth or the stock market falling. It just means that the economy is struggling. Perhaps it means that the Bank of Canada may have to cut rates a little bit quicker. Perhaps it means the US Federal Reserve will have to cut rates. So there are ways to remedy the problem if we do see or continue to see a slowdown in the Canada and the US. And I think central banks are ready to respond if they need to. But we'll have to see what the data tells us in the coming weeks. So companies, as I said off the top of the show, are increasingly disclosing what the tariffs are. They're talking about how much money or a cost to them, to their bottom line, whether it's GM or Ford, whether it's Walmart saying they're going to have to raise prices to a certain degree, whether it's an Amazon trying to disclose or wanting to disclose what how much tariffs are increasing the price of goods. This is what's happening right now. And I know the President of the United States does not want companies to talk about or to state what the different tariffs, what the costs are. I know the president has said recently that he would like to see Walmart, as an example, swallow the extra costs, swallow the higher pricing on goods, and not send it through or pass it through to the end user or the end buyer. And it's difficult because businesses aren't going to be able to swallow these tariffs. And as I said, you're seeing these tariffs affect business, not only cost them to take on some of the extra costs, it's causing them to raise prices, which is going to slow down their business. People won't be as inclined to buy higher priced items. If you are, for example, a fast food restaurant, you're seeing a drop, 3.5, 4% drop in fast food chains in the United States. McDonald's was one talking about a decline in same store revenues. And that's a problem because if people aren't going to fast food restaurants, that's starting to tell me, or that should be telling all of us, that the higher prices are starting to hit home, and they're starting to hit home with those that are those that usually go to the lower end restaurants, or the fast food restaurants that tend to be cheaper in price. So you're now hitting the lower income earners, maybe the middle income earners, whereas the upper income earners, I think the high end restaurants will still be okay because they'll be able to weather this tariff storm a lot better. So these are the companies that are telling us what's happening, what is going on behind the scenes, what is being passed or will be passed on to the consumer, what costs the company itself, or the manufacturer, or the wholesaler, or the middleman. If you're in the pharma space, for example, like United Health has witnessed recently their stock price fall, with the president talking about pharma having to lower prices. So this is what's going on, and that's why we're hearing a lot more from companies and what they're saying. We have an interesting chart in this segment, and this is U.S. business and consumers. They show their angst. This is their confidence. And as I mentioned, we had some recent numbers. Haven't had a chart, or at least seen a chart to update this as yet. But this was the chart coming into Tuesday's number. It probably would have a bit of a tick higher on the Conference Board Consumer Expectations Index. But overall, you can see the NFIB small business optimism is definitely sloping from the top left to the bottom right. And you're seeing consumer expectations, consumer confidence is falling, and it is falling quickly. It is falling quite fast. So what does that tell us? Well, if you continue to see an erosion of consumer confidence, or if what we saw yesterday was just a small blip and we're going to see consumer confidence continue to deteriorate, especially if we don't hear of any trade deals with Canada, US, trade deals with US, Euro, US, China, US, everybody, but especially the main trading partners for the US, I think you're going to start to see some of that consumer confidence continue to drop. I think the recent uptick that we saw yesterday was because of the potential for trade deals. And right now, that's all we have, potential. We need to start to see this go from potential to reality. And I think if we can do that, I think consumers' confidence will come back. And I think people will start to spend more money once again. And hopefully, with the trade deals, we'll also see the price of goods start to fall as we see the elimination of tariffs. Quick hits. This is the part of the show where we come up with, or we bring to you, 3 ideas that have been in the news recently. And I thought, as always, make a little comment and on each. First one, the bond market is shaking Wall Street again, this time because of worries about tax cuts. As the United States is trying to push through tax cuts, this means the US will take on more debt. The bond market does not like that. And we've seen bond yields rise, and that is not good or for the stock market. Global central banks talk harsh new economic realities in Tokyo. So global central banks, the head of the global banks, met in Tokyo, and they're talking about things such as potential stagflation, higher pricing around the world, slower growth. Not a good thing for central banks, because really they don't have the tools in their toolbox to attack that. They can attack inflation, higher prices. They can attack slowing growth separately. But together, very, very difficult. Currency analysts expect loonie to reach 75 cents this year, and that's Canadian versus US. And that, in my opinion, would happen, or only way it could happen, is if we get a tax bill, if we see more debt in the US, and we get no trade deals, no trade deal announcements. So that could happen. And if so, I do agree, you could see a higher Canadian dollar. So let's go to our first one, our first quick hit, the bond markets. See, everybody says President Trump has all the cards and he talks from a position of strength. I think the bond market has all the strength. The stock market has all the strength. But to me, the bond market is talking loud and clear right now. As the president talks about getting through his bill to continue his tax cuts and take on more tax cuts, increase the deficit, increase the debt, 36, 37 trillion. Right now, they pay over $1 trillion just on interest on this debt. The more the bond market, the bond yields rise, the 10-year, the 30-year, and the more the stock market starts to fall. Our first chart, 10-year Treasury, you can see now just under 4.5%. That actually got up to 4.6 recently, and the stock market did not like it. 30-year Treasury, that has now tipped the scales just over 5%. Once again, not good. These long-term treasuries, this is what mortgages are priced off of. We've seen mortgages in the US get above 7% again recently. It's come back down a little bit, but overall, not good if you're looking to borrow and grow your business or borrow to buy a home. Our third, I guess, illustration here is the US dollar. We can show the US dollar. US dollar tends to fall when debt levels start to rise. Obvious, it should be, I'm sure, obvious to many of you. When debt goes up, more worries. People move away from the US dollar, and that's why you tend to see gold move higher. And gold is a hedge against the US dollar. You can see how much the US dollar has fallen. And this is against a basket of other currencies, including our own, of course. Our second quick hit that I wanted to touch on is this idea of central bankers going to Tokyo and saying, you know, we could see some problems. Beautiful picture of Tokyo that we got for you. I've never been to Tokyo. I heard it's a beautiful city and something that needs to be seen by everybody. But you can see, as I said, this whole challenge of rising costs and slowing growth. Central banks can fight each of those if they're working on their own separately. When you bring them together and you have a stagflationary scenario of higher costs and slowing growth, then the bank doesn't know what to do. Cut interest rates, raise interest rates. It could go either way, and that is not something that central banks want to have to deal with. So I think from that perspective, keep an eye on what happens, what central banks are saying going forward. And our third quick hit, and this is currency. This is our currency, the Canadian dollar. And analysts are saying our Canadian dollar could move as high as 74, 75 cents. And as I said just a few moments ago, I think to get the loonie that high, you're going to have to see trade deals, well, not hear of trade deals being announced. That's first of all. And if the Trump tax bill gets put through in its present form and we see debt rising, continuing the rise in the US dollar will fall, which will take our Canadian loonie or Canadian dollar higher. And we have a chart on the Canadian dollar. You can see here in and around 73 cents now. So not too far off 74, 75 cents. But again, it will take a weakening of the US economy to see our dollar move higher. So we're not moving on Canadian strength. Our dollar is moving on US weakness. If you compare our dollar to other currencies around the world, it is still very weak compared to the euro and other currencies around the world. So keep an eye on our dollar. It is important, especially for those traveling to the US. Right now, our dollar is looking a lot stronger than it was just a few months ago. Now the part of the show where I take one of your questions. And we always get a bunch of questions throughout the course of the 2 weeks. I always like to pick at least one that we can talk about. Statistics Canada reports that foreign investors withdrew a record 35 billion. So this person has all the stats from the stock market last quarter. During this period of uncertainty, do you consider Canadian stocks an opportunity or a risk for Canadian investors? Wow. This person obviously knows their stuff and knows their numbers. Do I consider Canadian stocks an opportunity or a risk? Well, I think my answer to that question would be perhaps neither. I think you want to look for the best quality investment that is trading at the best price you can find. Does that mean Canadian stocks? Does that mean US, European, Asia, wherever those stocks, in my opinion, or wherever that investment idea is domiciled, whether it's a Canadian company, a mutual fund, wherever that is, I think as an investor, you have to be nimble and have to be willing to go all over the world to find good ideas. Yes, a lot of the good ideas are in the United States. It is the biggest economy in the world. And yes, a lot of European stocks, Asian stocks trade on US indices and US markets. So you can gain access to other parts of the world through the US markets. You also have international companies like Caterpillar and IBM and other companies that are domiciled, headquartered in the United States, but do business all around the world as well. So lots of ways to gain exposure to other parts of the world. As Canadians, we know that the pension funds, the mutual funds, they're almost 50% invested outside of Canada, mostly in the United States. So as an investor, as a Canadian investor, I think you must be invested in the United States and outside of Canada in general to see the best returns in your portfolio. Our market is too small, 3% of the world's wealth. We have minimal, we don't have as many tech stocks, as many retail names, as many pharma names. We are a country of commodities, petrocurrency, if you will, oil, mining, gold, and Canadian banks. Those are the three biggest sectors. And I think you need to look at other opportunities in tech and pharma and other areas to diversify your portfolio. So with that, I want to say thank you to everybody that tuned in to the show today. Thank you once again for taking some time out of your busy day. I also want to say that we will be back in 2 weeks' time on Wednesday, June the 11th, same time, 12 noon. And as always, until then, happy investing.